Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I am the host of today's program. I'm also the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading, real estate, short-let property business, and also how to make money online can be able to learn the various formulas and be able to execute these formulas and get the results they need. So today we'll be diving into the forex forecast from the time period of November 4th to the November 8th. Okay, November 4th to November 8th. So I want you to watch, and how this forecast goes is that we're going to go through the technical aspect of it. After the technical aspect of it, we're going to dive into the sentimental as we're checking out the technical to see how the traders are reacting, both retail traders and institutional traders. Then wrap it up with the weekly insights of what the news we're expecting, which is the fundamentals, and how we expect these fundamentals to drive the market. If this is your first time, please smash the like button, click the subscribe button, and also click on the notification bell icon so that you always be notified when we go live on here on this platform. So thank you so much. So currently we see the DXY, which is the strength of the dollar. We see the DXY, which is the strength of the dollar. And what you need to know is that DXY shows us that we are on a support level. DXY shows us that we are on a support level. Like last week, I told you guys that we expect the DXY to break below this low and we buy from there. So that's what the DXY did. It broke this low and the buys came in. So what I want you to see that DXY currently is forming a structure, and this structure could lead to next year, and this is called an expanding flat, exactly the similar structure we saw here, expanding flat structure. Okay, that's what DXY is currently forming, the expanding flat structure. So this is what it is forming, and if you can check the time interval, this is October. It is this structure started forming from October to October 23rd to about November 23rd. Okay, about a month. So this is the same structure we're expecting here, December, and this structure started forming. These are expanding flat. So currently for DXY, I'll be expecting to buy from DXY when it comes back to this support level. Okay, but I'm expecting a corrective structure. So after these buys and after this expanding flat is formed, I can then expect more push to the downside for DXY. That should be by next year. Okay, next year, January, February period. Okay, but currently what I see on DXY is this expanding flat forming. So you need to try as much as possible to buy from this low over here and be able to capitalize when the market completes this full expanding flat, and then wait for the next impulsive wave to the downside. Then with that said, we check out Euro USD. We can see as well that Euro USD is forming an expanding flat as well, because Euro USD is 80% correlated to the dollar. And if I'm to mark it out, what I see currently, you see this is the top, this is the tip, and then this is more of this point. So it is an expanding flat as well. So for Euro USD, I expect two things to play out. Either a little corrective structure, like you can see here from this support, okay, a little corrective structure from this support, or it could go deeper. It could go deeper above this high, okay, and then from here we'll be looking for our sales, and the major target for the sales is 1.07. 1.07. Okay, that's for Euro USD. But currently what we're seeing forming here is an expanding flat. This is the support level. And over here is the supreme resistance level. So, and last week I told you guys we'll be selling from when the Euro USD goes above this high. We'll be selling when Euro USD goes above this high. Then after that, now you see the sales. We caught this first sell, we caught the second sell. Now 1:3%, 1:3, that's about 6%. Okay, so now looking forward, let's see what the sentiment is saying for Euro USD. So for Euro USD currently we have shorts 53% and longs 47%. We're going to take otherwise the 47%, those that are the minority, because 80% of traders are totally wrong and unprofitable. But 20% that are profitable are the big institutions and the market makers that drive the market. And how the market makers make money is because when they see that there is $1 billion selling and they're investing $500 million, they're going to what? Buy. So when they there's $1 billion selling and then they're investing 500 million, they're going to add more money to the long. Since a lot of sellers are in, they're going to add more money to the long so that they push the market up and take out the stop loss of sellers. Okay, so with that, in that case, they will now make the money, the 500 million, on that particular differences. The differences are not usually that wide. Okay, so based on percentage, you see that we have 47% people longing and 53% people shorting. So I think the market is going to go to the other direction, which is the longs. But I'll not be focusing on the longs. Instead, I'll focusing on the shorts. Okay. So the shorts here now, we're waiting for market to give us a corrective structure halfway over here or towards this resistance here, and then we'll be going for the shorts. But if you're a scalp trader, yes, you can go for the longs. The scalp trades is going to be few pips long. Okay, this is for scalp traders. I'm just talking about scalp traders. You can just take the trades about above this high here, about 50 to 60 pips for scalp trading. That's what you can do for the longs. Okay, but not the bigger. Well, this market could go higher, more than this 60 pips. It could go up to this resistance. Okay, because this is just the start of the week. Okay, and then when it gets to resistance down, now we're aiming for this major 4. But whenever this major 4 starts, know that our major target is 1.07. Okay, you can hold trades, you can add to positions, you can enter multiple times, just like we did here last week. We entered here the first on Thursday, and also got an entry on Friday. And why I chose EURUSD as one of my favorite pairs is because it always gives you what re-entry opportunities. Even though the market moves, it's going to give you a re-entry. Okay, so I'll be watching it closely and I'll be sending out the signals to you guys. Then for AUD USD, we have quite a similar structure for AUD USD as well. So for AUD USD, this is what I see for AUD USD. Currently, the market is heading towards this support level, which is a floor. And from this support level, I expect it to what? Reverse and take out this high and enter. There is a resistance level over here. I marked it out back in the past. The resistance level is back in the past. So we'll be focusing on this resistance level over here, and then from here we'll then be expecting what? The sell-offs for AUD USD. So that's what I see for AUD USD currently. Let's check out what the sentiment is saying. Sentiment is saying that AUD USD, we have about 73% short and we have 27% long. I'm more comfortable buying AUD USD. Yes, I don't think AUD USD is ready to sell from the current position. Okay, there is a major liquidity. So this 73% that is short is going to be our liquidity that is going to help us to what? Move this market up. So I believe that when market comes to this level, there is massive liquidity. Let me show you. There is massive liquidity lying here. There is massive liquidity lying there. So when market starts moving up, AUD USD, okay, and gets to this point and breaks it, there will be a massive spike to the upside, okay, and head into this resistance. So I'll be watching out for the for market to come into this region and give me my setup. Okay, when it gives me my setup, then I'll be more comfortable to take up that buy opportunity for AUD USD. So be watching out for that. Okay, so even if I'm to take sales from AUD USD, I would wait for the market to break this trend line. Okay, I'll wait for the market to break this trend line and turn this market from a bullish market to a bearish market. And from the psychological level I can see a 0.66. From psychological level of 0.66, then I can be expecting what? More sell-offs from this particular level to the downside. That's what I see currently for AUD USD. But currently, I'm buys for AUD USD, but it's a scalp trade. The major target is the resistance above here. So we're watching out for the buy setups. And when market gets to this point, okay, there'll be massive liquidity that also help us to push the market to the upside. Since you already see that we have about 72, 73%, the market, the percentage just increased from 72 to 73% now of people selling. Okay, so the market maker is gradually using this downward push now to build liquidity for people to go in short. So when they want to move to the upside, they can swipe out the stop loss and then be able to take in the profits. Okay, so that's what I see for AUD USD. Then the next on my list is gold. I want to monitor few pairs this week, please, guys. I just want to monitor few pairs, Euro and AUD USD. And then for my VIP, I promise that I'll be sending you guys multiple trades, about three signals every day. And these three signals, I'll be sending it in the terms of you risking 1% to make 1%. But when I'm going to be sending the big cash trades, I'll be risking 1% to make 3%. Okay, so it's now up to you. Those 1% to make 1% trades are more of scalp trading. Okay, I learned one or two about scalp trading. So what I mean by scalp trading is because since Euro USD and AUD USD, I want to what my major move for this week is the sell. Okay, this is my major move, this sell. But this buy, I'm going to scalp it for you guys, which means that there is high chances when market comes into this zone. Okay, when market comes into this zone, I'll be placing the buys. Okay, and when I place the buys, I can be risking about 40 pips. Okay, I'll be risking about 40 pips to be on a very safe level. Okay, and then I'll be aiming for 40 pips, and I'll be sending this trade to you guys so you guys can at least make some money. Okay, and I'll be sending quality trades, about one or two. If we have a loss on the scalp trade, I'll send a recovery trade. Okay, so what you'll be risking there is about 1% to make 1%. But when the big trade comes, this particular trade, okay, which is my major trade for the week, I'll be risking 1% to make about 3%. Okay, that this is the major move. 1% to make about 3%. And then if I get another entry on this major move again, I'm also going to be getting another trade, 1% to make what? 3%. But this particular move now is just a short-term trade. This is not the main move for the week, okay? Or the main move we're focused on. You know why? Because this uptrend is gradually getting exhausted. This uptrend is gradually getting exhausted. So we're not going to leave money on the table. We're just going to scalp it in, and we're going to take what profitable risk to reward. There is high chance I can even put it 50 pips stop loss to be on a very, 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 very safe side. Do you understand? To be on a very, but the trades will be taken out within that same day, and we're aiming for 50 pips take profit. Okay, but if there's a way I can be able to get if there's a way I can be able to get if there's a way I can be able to get smaller stop losses, okay, smaller stop losses, about 10 to 20 pips, okay, I'm going to do that, and I'll be sending a signal to you guys, okay, definitely. And then we'll be able to capitalize much more, about 1:3%. So if you don't want to miss out on these signals, if you don't want to miss out on these signals, guys, if you don't want to miss out on these signals, join the Telegram channel. We have the free Telegram channel, and I'm so glad we were able to get up to 1,000 subscribers. I think one of our YouTube video blew up, and we got 1,000 subscribers on our Telegram. Thank you so much. I really, really appreciate you guys for your contributions. I really, really appreciate you guys for your support, and I'll be here to give you guys the content back to back to back. So join our Telegram channel and follow us with full commitment, follow us with full discipline. Okay, so currently that's the game plan for this week. I'll be monitoring Euro USD and AED USD to give you guys the trade setups. Why for gold? Gold currently it has the same setup for Euro USD as well, although this is more of a daily candle resistance. Let me show you guys that this yellow line, why I marked it. Okay, so this is gold. Yes, this is gold, and you can see that gold was rejected here to the downside. came here, rejected to the downside, came here, rejected, 3 touches, and this is a very strong level. So I marked it out because it's on the daily candle that I saw that rejections. And currently you can see that even today's candle itself has formed a wick. Today's candle formed a wick. It started up bullish at this point and formed a wick. So at this week now, it came to this top about $2,151 per gold ounce. Okay. So but currently what I see on gold is at the tip, and due to all the factors of the war going on and the interest rate cuts by the Federal Reserve Bank, this is what's really affecting gold in a whole. This was really affecting gold and made it to continue moving to the upside. So currently we're expecting gold to come into this level over here or lower to this level and then continue the buy setups. Okay, that's what I expect. Since that the war has continued, although hostage has been freed by Gaza militants, there is still the war has continued. And since the war has continued, a lot of investors are buying gold, which is one of it's God's money. Okay, they're storing their money in value in gold. Okay, and they're able to carry it around or probably have a certificate, because there are some companies now that you buy gold, they give you a certificate, and whenever you come back with that certificate, they can give you the gold bar without you carrying the gold bar around. They can just store it for you in a safe. And also, it's also a factor of why Bitcoin has been going up as well. Okay, we'll be talking at looking into that as well. So what I see for gold right now is this current level, market coming to this current level. This is a support level, and for me, we can now be expecting more push to the upside. Then the next on our list is the US oil. US oil. For US oil, the market has completed its corrective structure. The corrective structure we expect the market to give us is this particular corrective structure. Okay. This is what they call an ascending wedge. An ascending wedge. But market didn't give us an ascending wedge. Instead, it gave us this corrective structure. Okay. More of like, okay, no, I think it looks similar to an ascending wedge, but let's see what we can see. Okay, so this is what it gave us instead. Okay. This is an ascending triangle. Give us an ascending triangle instead of an ascending wedge. We were expecting an ascending wedge, but give us an ascending triangle. So this triangle has been broken out from, okay, for the oil. So now what we expect for oil, you can see I already marked it out. We expect what the corrective structure back into this resistance. There's a resistance here. And then from here, boom, we'll be dropping down to this support around $69 per barrel. $69 per barrel. We're expecting oil to head to $69 per barrel. Okay, and this will happen or continue because this will happen because of OPEC had a meeting last week. They had a very brief discussion meeting last week about the situation on ground when it comes to the increase in oil prices and also the war at Hamas and how it's affecting the whole supply chain of the oil uh in the world. Okay, so currently we expect market to come back into this resistance level. I've marked it out for you. There is a confluence there, resistance check, uptrend line broken. It needs to be retested as resistance before what the downtrend. So that's what I see for oil coming down to $69 per barrel. This is good. Okay, if you are not someone that trades US oil, okay, you can wait for oil stocks. A lot of oil companies, this discounts time, this is more like Black Friday for oil stocks. There's a lot of companies that are producing oil. Also, I think Dangote Refinery, which we commencing massive production, they said 1.8 billion tons of oil will be produced by next year 2024 when the manufacturing company starts officially. So this is a good time to buy their stocks. This is more of a Black Friday period for oil companies because their stocks are decreasing in price as the price of oil per barrel is dropping. But if you don't want to do that, you can as well trade this oil setup. Okay, you can place your alert. Okay, you can place your alerts over here. We have broker hot forex. They can help you to do the trading. Okay, so this is you place your alert. I just clicked this. This is about $75.73 per barrel. So I put the points there. Let me add an alert on it. It is loading. So whenever the market comes there, you'll be notified by TradingView, and then you can now start looking for your sell setups. Okay, start looking for your sell setups. It now depends on the risk to reward ratio you want to get on the trade. Risk to reward ratio can be at least 1:3. So you aim for once per bar sell setup on US oil. I've created that. So once the market gets to that level, I'll be alerted immediately. And I'll be able to take the trade. So over here, I can now aim for this red line. That's where we have and I can go for 1:4 at a very safe level. So this is what I could see for US oil. This is not financial advice. This is just my own take on the current market structure. Okay, so then the last on the list is Bitcoin, the people's money. I know yesterday it hit 40K and this morning it went above 1,500. So currently I see there is a major resistance line on Bitcoin over here, and we have 461 people selling Bitcoin over here, and there is 8.06% chances of the market having a resistance at this point. So market is close to our resistance level, and the psychological level we could be using is the $42,000 per coin, or $42,500 per coin for the reversal. So that's what I see currently. So on Bitcoin, we are currently on a massive sell-off point right now. There could be a massive sell-off point at any moment from now. And these are psychological level we're focusing on. These are psychological levels we're focusing on. Okay, so these are the psychological levels we're focusing on: 42,000 and then $42,500 per coin. Okay, so at this point now, we can now be expecting what market to come down from that level, just like we're expecting Euro USD to come down as well. When dollar gains strength and momentum, we're expecting Bitcoin to as well drop. Okay, so that's what I see currently on BTC. But mainly, I'll not be selling. What I'll be doing, I'll waiting for market to come back to a favorable level for me to invest. I'll be more of an investor in Bitcoin than a trader. Okay. Okay, so that's what I see mainly for Bitcoin right now. So when it comes down to about this level, or comes and clears this liquidity, because there's liquidity lying below it, this is about 32,000 or so over here. Or yeah, 33,500 or so. Then from here, we can now be expecting to buy more. So that's what institutions are doing. So what I believe is that after the halving, April 4th, 2024, then in the next 4 months, you can now be expecting massive bull run on Bitcoin. Okay, so let me check the sentiment for gold first. I did not check the sentiment for gold. Let's see the sentiment for gold. XAU, this is XAU. So we have more of shorts. We have 71% shorting and 29% longing. So that 29%, that's why I told you I have a view of the longs for gold. I have the view of the longs for gold. Okay, so in that case, if I need to short gold, I need to see a break. I need to see a break of this line. Okay, so if there is a break of this line, then there is high chances that we can then expect gold to give us this break, correct, and then continue pushing down. But if we don't get that break, and I'll not be looking for sales. Currently, we're still on this uptrend line, so I'll be looking for the buys. Okay, so that's what I see currently for gold. And since we're done with that, let's look at the weekly market outlook for December 4th to December 8th. The headlines for this week, including the Reserve Bank of Australia and the Bank of China policy decisions, but the market will likely be focused on the US labor market reports. On Monday, we have Switzerland CPI. Tuesday, we have Tokyo CPI, China Service PMI, Reserve Bank of Australia policy decisions, Eurozone PPI. Producer Price Index, Canada Service PMI, US ISM Service PMI, and US job openings. Wednesday, we have Australian GDP, Eurozone retail sales, US ADP, Bank of China policy decision. Thursday, we have China trade data. Then we have Switzerland unemployment rate, US challenger job cuts, US jobless claims. Friday, we have Japan wage data, US non-farm payroll, University of Michigan consumer sentiment. So already on Monday, the Swiss CPI year over year is expected to remain unchanged at 1.7% versus 1.7% pro. While the month over month measure is seen at minus 0.1% versus 0.1% pro. The inflation rate in Switzerland has been in the Switzerland Bank's 0 to 2% target. Okay, so that's the inflation rate. CPI means inflation. Okay, so year over year means last year compared to this year. Okay, so the dates December 4th last year and December 4th this year, they say they are expecting to be unchanged for the inflation. The inflation, the rate will still be the same. Okay, well, month over month, last month against this month, they are saying that okay, this month now it's reduced by 0.1% versus last month that it was 0.1%, which is good for Switzerland. So they have a target of 0 to 2% target for a long time for both the headlines and the core measures. The central bank is unlikely to hike, even if we get a small bit at the data might be distorted due to temporal rent and energy price increases. Okay, so the prices of that inflation could be distorted due to rent and energy price increases. And if that happens, I think the data is already out. Switzerland CPI, it came out this morning, and you can see that it was worse than expected, 1.062, which is lower than this. So the inflation is lower. The inflation in Switzerland is lower. Okay, so I think that will make the Switzerland currency to be weak. So with that said, that's out of the waters. On Tuesday, we have the Reserve Bank of Australia is expected to keep the cash rate unchanged at 4.3% after they hiked by 25 base points in November. Reserve Bank of Australia Governor Bullock has kept a hawkish tone recently as the central bank is now more worried about inflation expectations getting out of hand. The data, on the other hand, has been mixed but scored towards weakness as the PMIs fell further into contraction and the monthly CPI missed expectation across the board, although the teamed mean measure fell by just 0.1%. So currently we'll be looking forward to this the hawkish tune of the Central Bank of Australia, because they have inflation already rising. And if you can see on Tuesday, we have some uh, policy decisions that they'll be making to be able to control that inflation that is going on. So that's what we're looking at forward on Tuesday. You can see interest rate decisions, and these interest rate decisions is coming by 4:30 a.m. And if these interest rate decisions is hiked, it's going to make Australian dollar to be able to lose some strength, and then we'll be seeing some sell-offs on the Australian dollar if the interest rate is hiked. Okay, so that's what usually happens when interest rate is high. So we'll be looking at the Australian dollar on Tuesday, which I'm telling you, I'm more interested on the sell-offs for Australian dollar. So we're watching out Tuesday for Australian dollar. Then on that same Tuesday, we have the US ISM service PMI is expected to increase to 52.0 versus 51.8, which is good. Okay. The recent S&P Global Service PMI beat expectation, but the most notable take from the report was the line saying that as a result of subdued demand and decreasing backlogs, companies reduced their workforce for the first time since June 2020, affecting both service providers and good producers. Cost pressure eased with input price rising at the slowest rate in over 3 years. So this US service PMI has to do with the cost of the production of goods and services in the companies. And like they said that the cost increased. The cost increased from 51.8 to 52. So there has been some layoffs. There has been some layoffs so that the companies can be able to keep up to the production of goods and services. But this is also affecting the services and the goods that are being produced, because of the lower the workforce, the lower the services, and also as well the backlog, which means that orders that have been sent had not been delivered on time. Okay, so that's the effect of such choices they made. Then the US job opening is expected to fall to 9.350 million versus 9.553 million. Okay, job openings, which are jobs available. The labor market has been showing clear signs of weakening lately, and despite the volatility in job openings, the trend is self-explanatory. This will be the first major US job market report for the week, and it's highly likely that it will be markets moving. Okay, so this is the job market, this is job market opening chart you can see over here. So you can see from 2024 to about 2020 and then 2029, you can see the trend. The trend has been dropping. This is a downtrend for the job openings, okay, which means that jobs that are available in US is not much anymore. Jobs that are available in US is not much anymore. And you see this information was gotten from the US Bureau of Labor Statistics. So this is quite bad that they are laying off people and jobs are not being available. And these jobs can be replaced with artificial intelligence, because one advantage of artificial intelligence is that the job that is done by 9 persons, you can be able to then employ just 3 persons to be able to get it done quicker, faster, and effectively with the help of artificial intelligence. That's one of the major issues we're seeing currently. So we're watching out for this data, and it could be a major move in the market on Tuesday for the New York session. Then on Wednesday, we have the US ADP, which has to do with private sector non-farm payroll. It's expected to show 128K jobs added in November compared to 113K in October. The market at the moment is more focused on the labor market weakness. So a strong report might trigger some reactions, but it's likely to be reversed soon after, as the market will look forward to the non-farm payroll release. You can see over here, this is the chart. From June, there was a job added of 455. Then on July, we had jobs added of 312. It has been dropping. August 180, September 89, and then October 113. So currently now they are saying that the November is going to be 128 compared to October, which was 113. Okay, which is quite good for the dollar. But this particular information can be reversed, because we have non-farm payroll on Friday. This is for private sector. ADP means private sector, the jobs added in the private sector. So for the general sector, okay, that's what we're expecting on Monday. And this could be a major move, New York session, okay, on Wednesday. Let's see that this New York session, no much interesting news. Just by 2:15 West African time, New York session, we'll be expecting that news to be out. So the Bank of China is expected to keep interest rates steady at 5.00% versus 5.00%. That's what they have been doing. They have never changed their interest rate. This move is supported by the recent Governor McLean comment, where he said that interest rates may now be restrictive enough, and the CPI reports, where all the figures fell further, especially for the underlying inflation measures, which is what the Bank of China is most focused on. Moreover, last week, labor market reports, despite being good, showed another increase in the unemployment rate. Okay, so currently inflation in China is good. Okay, and that's what they have been fighting. China has been fighting inflation back to back to back, and they don't increase interest rates. You can see interest rate has been steady. If you check the chart, since beginning of this year to this point, they have not been changing interest rates. China and Japan, those two countries. So they are focused on inflation. They don't want inflation to mess up their currency. Okay, and with the help of high trade balance they have a lot of exports more than imports, and they have a lot of foreign currency coming to them. So they use that foreign currency to stabilize the economy and stabilize their inflation and so on and so forth. But one issue they are having now is that the labor report is weak. Okay, they are seeing that there has been a lot of job openings, but there is still unemployment increasing. So people are choosing not to work. Okay, although that there is job, people don't want to work in China. So that's what they're saying there. So we're watching out on Wednesday for the China report. I don't think it is, yeah. But watching out for that. Then on Thursday, we have the US jobless claims continue to be one of the most important release ever every week, as it is a more timely indicator on the state of the labor market. Initial claims keeps on hovering around cycles low, which shows us that layoffs have not yet picked up notably, but continuing claims are now rising at a fast pace, and that's indicative of people finding it harder to get another job after being laid off. This week, the consensus sees initial claims at 223K versus 218K per. Why there is no estimate at the time of writing for continuous claims, although the last week number was 109 1927K versus 1841K, which is people that are saying I don't have job is increasing massively. But the current one, which is jobless claims, the current claims, which is this number can be influenced because most people will be unemployed, but they will not get notified to the government that they are unemployed, so that government can give them unemployment benefits. Okay, but this one is somebody that has already registered and keeps telling the government, I am still not unemployed. That is what they are saying, that it is picking up massively. So to end the week is non-farm payroll, and we're expecting jobs to show 170K added compared to 150, which would be good for the dollar. So we'll be trading non-farm payroll live with you guys. Thank you so much, and I wish you guys a profitable trading week. I'll be dropping the details below in the comment section. Like, share, and comment. Okay. Have a wonderful trading week. This is Anthony Phillips Njoko signing out.